Hello, it's Friday and time for our weekly wrap up, where I'm joined by Harry Daniels, Managing Director of Squawk in London. Now, US retail sales disappointed this week, slipping 0.3% in June. Has this data raised concerns about a slowing US economy?
Looking at the breakdown and why we saw the sort of numbers that we saw, again, that 0.3% decline, as disappointing as it is for the month of June, sales in earlier periods, I think will allow us 1 month's worth of aberration. If you take a look at maybe some of the reasons for the breakdown as well, I don't think there's enough in there and I think you've heard from Yellen, I don't think there's enough in there to really blow the Fed, of course, or to alert anyone to anything other than, as I said, there are certain factors, I think, within that report that really would have determined why we saw what we saw. The early Memorial Day holiday was seen as a reason, with an extra week basically taken on to the end of a school year in the northeast as well. So the weather, the climate is said to have played a part in the west, rainfall in Texas. So they're all excuses if you want them, but long and short of it is, I think there are enough reasons really to put this down to a month of aberration and not a long-term fall really in the trend.
UK inflation has dropped back towards the lowest rate in more than 50 years, offering a boost to consumers. Some analysts worry about low inflation lasting too long. What is your outlook for inflation by the end of the year?
I think it sticks along to the banks' lines really. Obviously, energy's played a part in the rate of inflation so far this year, and I don't always go with the bank forecast really on a lot of things they do, but they're aligned with what we've seen from other analysts that again we'll get low levels of inflation for the rest of this year. I don't think it's enough to concern the Bank of England, as we've seen from Carney and from Miles the last couple of days. They see this as a pass through and believe that we'll move back through the back end of next year and maybe even accelerate, I think, into 2016 in terms of prices. So as much as I think as a problem for wages and a small cap on wages at the moment, it's not really reflecting what we're seeing in the rising wages data that's coming through. That productivity gap is narrowing as well. So I think overall, I'm not too worried about the rate of inflation, and I personally think, from a personal point of view, that rates need to come from the lower bounds that they are right now, because I think there are potentially more shocks to come over the next couple of years.
China's economic growth for the second quarter surprised on the upside, rising 7% from a year earlier. What are your thoughts on this calculation? Is the Chinese economy on its way back to meeting this year's growth target?
Well, I think if you take a look at what the PBOC and the government have said and have done over the last few days or weeks even, they pinned their flag on a 6.5-7% rate over the next couple of years. And if I know the Chinese government, as we do to a degree, I think they'll come through on their promises, because whatever it takes, they'll make sure they hit their targets. They don't want to lose face. They don't want to be seen to be slacking. At the same time, they have said in the past that there's no big problem with a slightly slower rate of growth, although they keep ascertaining that they will reach that 7% target. But I just think all the stimulus they're bringing in place now, the fact they're not going to allow equity market as it is to derail the economic path at the moment, means that I don't see a massive problem. I mean, there are other drivers in the economy. You know, the service sector activity was up for the housing sector partially. We also saw, I think, overall activity domestic activity still there by the trade days of the first half of the year. And it's up and down. I just think they'll do what they need to do to keep growth on path.
Now we have the RBA and MPC meeting minutes out next week. What information are you expecting to gain from these minutes?
To be fair, on the MPC, I just think there's a growing consensus really amongst analysts here at the moment for a more hawkish sentiment to come from the UK central bank. I think the speeches we've heard from Carney the last couple of days, as I said, from Miles, who is traditionally seen as a dove, although an outgoing member of the MPC, overall there tends to be a realisation that rates will have to move from their floor, and we may start to see that reflected in the August minutes. I think we may have to wait till September to get any kind of movement from the 9-0 voting pattern at present. But again, we've had MPC members just hint. Well, I think Will hinted that he would have voted in July, but thought August was maybe a more appropriate time to vote for a hike. So, and I don't think he'll be alone. He's often been joined by McCafferty. I think there may be at least one other person now on the MPC, maybe Forbes, that will go with Will and McCafferty and vote for a hike as well, because I think that they're of the view that this once this pass-through is done, that the prices inflation pass-through is done, we will start to see a more rapid rise in prices. For the Reserve Bank of Australia, I'm less clear about where we're really going to where we'll see what we'll see on that. To be honest with you, I think this is one of those sort of months where during the summer period, or our summer period, their winter, they'll try and really just consolidate really and refrain from any major sort of policy shifts at this moment in time. Again, the statement released after the last decision to hold rates at 2% wasn't really changed from the June statement. Minutes from this July's meeting really shouldn't cause too much of a concern or see too much of a change from what we've seen in June. I think we may have to wait till a little bit deeper into the year. And really, a lot of this depends on what the Fed does. Same for the Bank of England. They might dismiss that they have to wait for the Fed or keen on what the Fed do, but I think it's the Fed will be integral into what we see from amongst other central banks.
Well, thank you very much for your comments, Harry. Well, that is all for this edition. Do join us again on Monday for more of the same. Have a great weekend.